Hey guys, it's me Chris, and in this video I'm going to show you my analysis of NIO. Now I called this one out a while back when I was doing covered calls and such strategies, and then it's been popping up on my radar again. It's actually been making some waves in the market. We've went from literally around, I would even say back here, April, May time frame it jumped. And I can't really remember when I posted the video, but it was probably around this area. And then ever since then, it literally has taken off. The high is almost pretty much 67. And it's dropped back down. It's retraced. And the question is whether or not it's going to come back up. Now, there's a couple things that I do use in my technicals. I was never a big chart person until I got into day trading and short-term trading to try to pick up profits when everything's down for the long run. And I really started hammering down on the Fibonacci, RSI, the Relative Strength Index, the TTM Squeeze, and also the MACD. I like to keep things simple. If you take a look at your technical analysis or Google such things, you're going to find out there's thousands out there, and it can be overwhelming. Really, what I have to stress to anyone getting into trading and even long-term investing and when to get in the better margin or to pick up a better margin is really find out what works for you. Like they say, go into a niche, whatever, or a specialty that you love and that works for you. And that comes with the territory of stocks too. You know, there's guys that trade on earnings reports. There's guys that trade on certain fundamentals. There's certain ones that trade day by day on certain technical analysis or certain technicals within the charts, VWAP, stuff like that. But what really works for me may not work for you, but I do want to show, obviously, and be an open book to you guys. I do use Fibonacci, as you can see, and if you don't know, or not actually Fibonacci, Ichimoku, but I do use Fibonacci to kind of see where those retracement territories are. But in this case, I'm just really getting into a position on the downward movement, and then hoping or playing it out on the uprise and the increase in the stock chart here. So what I'm looking at in the Ichimoku here, everything looks green. We're kind of barely getting out of the cloud on the daily. I do like to use a couple of different time frames, such as the 4-hourly, and then to narrow it down when to get in better is usually a 30-minute or maybe just an hourly or even 15-minute. Really, the more you focus in on the short term, you can see what's going on closer in that specific period. So, for instance, if I'm trying to get in within the day here, then I'm going to use a 5-minute chart probably to check when that lowest point is that I could get in. And as we can see, this is on a downward movement. So instead of getting in right now at 43.29, I could set a limit order at 42.84 and somewhere down here. And then if I get in, then great, because over the long term, especially within this hourly candle, and when I say hourly candle, right, or hourly chart, each one of these candles, each one of these lines are by the hour. And it's looking like it may just come up into an upward movement by the TTM squeeze here. It is kind of squeezing to the north portion of the price, but it's not the biggest pop. And that's just the hourly. And we take a look at the 4-hourly and we can kind of see it's actually in bearish territory. There's some strong resistance right here in the 40.57, 48.71 area. But like I said, in the long-term daily, it looks like NIO may just be a good position to get into. It is down, so one of the golden rules with using the Ichimoku is never trade any of the stocks or anything when they're in the cloud, and that depends on if you're in a 4-hourly or a daily chart. A 4-hourly, I really stress don't get into trading in those clouds. The daily too, it's just because that's where your resistance and your support levels are, and you kind of want a confirmation whether or not you want to get in. So anyways, my analysis of NIO, we are looking good to the upward movement. This has retraced down, and now it looks like it may just bounce. We got the Ichimoku line back here. It is bearish, so just kind of caution yourselves when entering NIO if that's what you want to do. But for me, I've noticed that in order to be aggressive, you know, this downward, like I said, the Ichimoku spin is down below the trend, and I don't really like that. It could pop up just a little bit and we could fall further. And that's just really looking into the finances of NIO and seeing what the company is about. Now, NIO is relatively new, but one of the websites that I like to use is discoverci.com. It tells you the intrinsic value. Now, if you don't know what intrinsic value is, it's literally the value of what you're paying now for the future, and it's really what the theoretical price of the stock is worth compared to its finances and what they're doing. So I would just go to NIO, and unfortunately, like I said, NIO is so new, it doesn't have the valuation here. Let me see if I can find it for you guys. But usually when you type in a stock that it does, that will give you the feature, it will be over here in the left hand side. And watch, just for instance, Apple will show up. It shows you your valuation, stock valuation right here. You go over, and this gives you a margin of safety, whether or not it's undervalued or overvalued. And as we can see, unfortunately, Apple looks overvalued compared to what their finances reflect, how much they're growing and whatnot. Right here, it does say that Apple's only worth 72 compared to 121, so it has a downside risk of 40%. But it takes in literally the projections of their current growth rate, the weighted cost of capital, tax rate, risk-free rate. You can change the risk-free rate, but I really don't like to mess with these. This is really conservative and gives you pretty good analysis of where the stock should be at. Reinvestment rate, debt ratio, and then, like I said, this is the projection, and then terminal growth and projection inputs. So we have normalized EBIT, or earnings before interest and taxes. Reinvestment rate, that means Apple, if it reinvests, obviously. So you can kind of play with these, but I like to keep it simple and just go off of this. So the long term for Apple, I would kind of be hesitant. But if you're day trading it, then obviously you guys know that you can still pick up profits on the short term. But back to NIO, unfortunately, NIO doesn't show up right now. Like I said, it is relatively new, and that's why. Another thing you can look at is what I call, or what's called Guru Focus. It's a really good analysis tool and website to use. It is free. It does have a paid version. The paid version shows you more recent insider trades and gurus, like I don't like to use the word guru, but Warren Buffett, Peter Lynch, Carl Icahn, and all those guys. But for instance, if we're looking at NIO, we type in NIO, and it gives us a quick overview of what NIO would look like. We have a financial strength 5 out of 10. Profitability rank only ranks 1 out of 10, not very good, and it does give versus the industry and versus its history. So obviously it is doing really good compared to its history, but versus the industry, it doesn't necessarily meet the criteria that I would invest long term. I would take a look at its competitors in the industry and see which has the better market. As we can see right here, they do pop up. We have NIO Technologies, Workhorse Group, that's a big name coming out. Candy Technologies Group, Electromechanica Vehicles, Bluebird. So let's take a look at Workhorse just while we're here. As you can see, it's probably the better bet. Operating margin, wow. It's still profitability rank is 1 out of 10, but its financial strength is 6 out of 10. That means their values, they can't handle their finances. But as you can see, it's really popped up compared to last quarter, or 2019. Let's take a look at the quarterly. And it's actually got a late reporting. Why is it? Oh, no, it doesn't. So September 20th, compared to December 2020. We can see the difference. It does have a lot of debt. Its cash is 46. Weighted cost of capital, so on and so on. So that's just two of the websites that I like to use, guys. And then obviously the chart. So this is 50-50. We are bouncing off the RSI, which is a good sign. But it has taken a quick reversal here. The MACD is looking pretty good, like it could be a strong wave to the north side, and so is the TTM squeeze. We're getting out of that the last dip right here. As you can see, when you come out of the TTM squeeze, it likes to come up, but I would just caution. Anyways, guys, that's my overlook of NIO. I've talked about it before with covered calls, and it really has made a good return on me. I did get out early, but things happen. I don't like to get greedy. I like to take profit when I can. So anyways, guys, if there's any other stocks that you want me to take a look at, I'll be glad to take a look. Anyways, as always, happy trading, and I'll see you next time.